All right. What's up, everybody? This is Stu and David. This is Filling the Storehouse podcast. How you doing this morning, buddy?
What up? What's going on, my friend?
Oh, man.
Nice Saturday morning, bright and early.
Yes, sir.
More so for you.
Yes, sir. Hey, so this one is going to be a little bit different. We had our friend Jeremy Hands come and do a webinar. Some of you might have listened in on it, joined in on it. It was, probably a month ago or so. And Jeremy talked specifically about the niche asset class of mobile home parks and RV parks. And our plan was to turn this into a podcast. So here it is. So it's not going to be really us interviewing someone or talking about a subject. We're going to turn it over to Jeremy to go through his presentation. So he does have slides for it. And so if you want to watch it on YouTube, it could be a good way to go as well. Dave, what do you think, man?
Yeah, tons of value add. Jeremy is a ninja. He's an active duty. Well, he was active duty guy. Now he's quasi-active duty reservist, full-time. Just doing crushing deals on the side, doing partnerships, and I highly encourage everybody to not only listen but do check out the slides at some point. Ton of value there.
Yeah. So Jeremy is a part of our mastermind group, the War Room Real Estate Mastermind. He's a part of our small group, and honestly, I think David and I have grown tremendously because of the value that he's brought to our small group. He's pushed us to do bigger, better deals. And speaking of, we did a deal recently and closed on a mobile home park in Colorado. We partnered with some of our friends who were just on our last podcast, if you listen to it, with Byron and Katie.
Yeah, I think there's obviously there's some incredible growth that has happened. I would also encourage all of our listeners to participate in a mastermind. Not only will it open your mindset, will help you develop and grow to achieve your highest and best, but there are literally deals being done through the mastermind, that opportunities that are being presented that people who are in the mastermind just would have never done with, either would have never partnered on or never even been exposed to or knew that these deals were out there. So it's awesome. It's awesome to see folks doing deals within their groups, and I love it. It's great.
Yeah. So if you're in the military or a veteran and you are interested in joining our mastermind, the War Room, you can send us an email, wrmastermind@gmail.com. And we're actually our small group. There's a couple of us, or David and I. We weren't invited into this deal, but there's a deal with a couple of other guys in our group that they're taking down a 52-unit apartment complex, which is pretty sweet.
Yeah, it's so rad. We're pumped for those guys.
Yeah,
it's just a great place to encourage others to do great things, and just to be able to be a witness to it and partner to it, and a challenge to do bigger things.
And we're doing more deals too, right? We're, our partners, Byron and Katie and D Reezy, we're looking at more deals in Colorado. So, if anyone is interested, and if they didn't get into our last deal with the mobile home park, there's still opportunities out there. We're looking at more deals, and there will be emails to come in the future. So if you're not in our email list, then hit us up and we can add you to it. We have to show that we have a relationship with you. Because we allow investors that aren't accredited to come in and join us. So that's that. And then, last thing we want to talk about before we jump into this episode is the Best Ever Real Estate Conference is coming up pretty soon. It's in February every year here in Colorado. David and I went last year up in Keystone, Colorado, had an amazing time. It's gone virtual this year because of COVID, but it will still be really, really good information and really good networking, although virtual. And that's where David and I met with Byron and Katie. It's where I met Byron like 3 years ago initially. So, and then we've continued to stay in touch and become friends and now partners. You never know who you're going to meet run into at these, real estate events. They're jam-packed with information, lots of good people to meet. Some people might think they're expensive, but if you join partners with people there and do deals together, it's all worth it. Or even just the knowledge that you gain, well worth it.
Yeah, for sure. And what I can assure you is if you don't invest in yourself and take these opportunities, you absolutely will not meet those people, and you will not see those deals, and those doors of opportunity will not be open to you. And that's not a fear tactic. It's simply something that when you choose to invest in yourself and do these things, it's like reading a book, right? You will gain immensely from it. You will hopefully learn something for somebody else, and there's amazing potential to do incredible deals. And so when you put yourself in that room, it's just it's an awesome opportunity. And Stu and I have benefited greatly from going to conferences and doing things like this, and the partnerships and the fellowship has been amazing. And we've also had opportunities to get affiliate links for these different opportunities. So you'll find those in the show notes, and there's a discount available if you use the affiliate link. And just would highly encourage you to look at these types of conferences to expand your mindset and to help you get your highest and best.
I mean, for sure. Yep. So like David said, there's going to be a link, best ever conference discount to go if you are the slightly bit interested in commercial deals, bigger real estate deals, syndications, apartments, multifamily, mobile homes, anything in that arena. You should be at that conference. All right. Well, we're going to turn it over to Jeremy Hands. Hope you enjoy this. It will open up your mind to an asset class that we love and are excited about. We're invested in ourselves. And most importantly, go fill your storehouse.
Grab a notebook, folks, a pen, take some serious notes, and take action and make it a great day.
See you. Okay. Well, we're here recording now. So that way we can send it out to everybody. If you guys don't know me, I'm Stu, and that's David. He is my business partner at Storehouse 310 Ventures, and we have Jeremy Hands with us tonight. And Jeremy is a friend of ours. He is a part of our small group within our War Room Mastermind group. And Jeremy flew helicopters, still does fly helicopters. He was out in San Diego with me. I taught him everything that I know, and look at him now. But he decided to get out, go reserves, and do huge things in commercial real estate. And he is crushing it inside the mobile home park and RV park space. He lives in Pensacola, Florida, and he's been purchasing mobile home parks and RV parks for how many years now, Jeremy?
We have to refinance this year, so 5.
5? Okay. So I'm going to turn it over to Jeremy. Jeremy gave a really great presentation at the Veterans REI Live Conference. It was probably the most popular one. And I asked him to kind of come back because David and I recently partnered with Byron, Katie, and Dave Rexine down there. They're on the call. We bought a mobile home park or 2 mobile home parks in Colorado, and we are having a really good time with it. They're having a lot more fun with it than Dave and I are, but they can tell some stories at a different time on a different webinar. But I'm going to turn it over to Jeremy to give us his story and why he thinks this asset class is by far the best asset class for investing right now. So Jeremy, let me give you host capabilities.
Da-da-da.
And
host. So
all yours, friend.
All right. Hey, good evening, good afternoon, whenever you watch this in the future. Jeremy Hands, husband, dad, got 3 kids, wife of 12 years. I think that makes me more successful than anything else, to have a woman that'll love me that long. But I jumped into real estate back in 2010, right back when Stu was my boss, or I guess the IP, and I was just a little student going through helicopter training. Bought a 4-plex in San Diego that was probably way too much money and didn't know what I was doing. But I bird and house hacked before those were words. and made a ton of money on that, and then got sent to Pensacola begrudgingly. And out here, I have slowly worked my way from a hobby to a side hustle to a part-time job to a full-time job to basically a career, and now a business with a couple of people working for us as we've expanded in multifamily. So I definitely love the mobile home park RV space right now. Also doing apartments. I've been syndicating for the last 4 years, both asset classes, and I'm excited to tell you all about why I think this is more or less the perfect investment. And I say that even after a hurricane hit Pensacola last week, and I spent a lot of days cutting trees in the mobile home park. So with that, let me give you my screen here. I want to share screen one. All right, can you get a thumbs up? Can you see my screen? Perfect. All right. So a little bit about me, right? Navy guy for 10 years active duty. I started investing kind of in 2010, like I said, but started taking it a little bit more seriously in 2015. By 2016, I kind of realized that this has become kind of a full-time gig, and I left active duty because of that at the end of my commitment in 2017, jumped over the reserves. Since 2017, I've been more or less, though, a full-time reservist working down here in Pensacola at flight school. So it's kind of a cool deal where I can kind of do both things. They pay me money to fly helicopters, and then I get to make money with real estate. They don't believe me, but my Navy job now is my part-time side hustle. And so this is what I love doing. MH60 Sierra guy, nobody cares about that. I do have a partner. That's why I have the V22 up there that I've done a lot of this stuff with, Bob Preston. He's not here tonight, but we make a great combo of where we are. So if the question I want to pose tonight, and I want to say first off, these are kind of high top, wave top level of mobile home park investing. But if you want to talk more, man, come reach out to me. My wife is tired of talking about real estate at this point in our marriage. So if we can set up a Zoom call and I can get my words out, that'll probably be better for her and for I. So, but if I'm thinking about a perfect investment, there's a couple things that I'm thinking about that I want, right? The first thing is high returns, right? So we'd all agree, if you're going to make the effort, put in the time, you want to make some money. The second would be, if I can, right? I don't think this is a requirement, especially now as I'm buying more and more expensive apartment communities. But if you have a low initial price, that makes it a lot easier for you to control the entire asset with just your own capital or without having to raise as much money. I don't know if anybody saw this week, but Grant Cardone got sued for his funds, right? And so what does that mean for us as syndicators? Well, nothing much, because basically he did a lot of stuff wrong, but there's going to be a lot more scrutiny, I think, in that industry of raising money. And so we've seen everybody and their mother thinks they can raise money now, and they can, but a lot of people haven't done it. So if you can buy something that you don't necessarily need partners on, or only a few partners, it makes it a lot easier, I think. The next thing is I prefer something with less competition, right? I call it the nose crease. When I talk about mobile home parks and somebody does this, right, and you get a little crease across your nose, that's just like a point on the cap rate that I know I'm going to be able to make, right? So every time somebody creases their nose, I'm like, yes, the less you like this, the more I can make money, because there's not as many people competing for it. And I will say the secret's out, and mobile homes have definitely become more of even a institutional buying decision now. So there's a lot more bigger players, but there's still way less competition than maybe that nice apartment complex. The next is I want a high demand for the product. The truth is, most people probably on this call tonight, or they've ever listened to this call, is probably in the upper half, if not the top 25% or even higher demographic financially in the United States. The truth is there's a lot of people, though, in the bottom half. They're good people, hardworking people, but they can't afford $1,000 a month rents. And here in Pensacola, right, we just had the hurricane. A lot of stuff was damaged. There is not enough low-income housing before the hurricane. You add a whole bunch of damage now, and it is like a catastrophe. And so if we have anything available, right, it's already full. In fact, last week we started renting out just lots of land. No sewer, no septic, no power. People just needed a place to park an RV. They brought their own generators. They're going to go dump their own trailers, and they're willing to pay us hundreds of dollars a month because there's a demand for places for people just to park RVs and mobile homes that doesn't exist in a lot of places. Next one would be recession resistant, right? When bad things happen, I'd like to be counter-cyclical. So if everybody's making money and I'm not making as much money, that makes me sad. But if I'm still making money when everybody else is losing everything, that makes me happy. And so try to play the emotions there a little bit. And then finally, the reason I got into commercial real estate is I like creative solutions. So a lot of us probably military background or work in a job in which you basically do what you're told, and that's it, right? The better you do, the faster you go. That's the only thing you really do. I love the idea that if I can find a way to make more money, that more money comes to me. And so mobile home parks have a lot of opportunities for us to find other ways to capitalize on that. So there you go. There's a really beautiful mobile home park. We're going to talk here at the end of kind of some things you want to think about, I think, when you're buying mobile home parks. And some of you guys already own some, probably know this stuff. If you looked at this park, this to me is like the creme de la creme, right? Because you can see curbs. I don't ever buy mobile home parks that have curbs, but paved roads and curbs allow you to take different types of financing. So that would be a pretty great deal. Now, I told you that we had a hurricane, and just to prove that I still believe in this, and I didn't just drop off the face of the earth after we decided to do this this call, is I decided that this was still a good presentation, even after I spent an entire week looking at mobile homes that look like this after the hurricane. So this is actually a mobile home from a park that we own here in town in Pensacola. The tree was probably about 60 to 80 feet, fell right through the guy's bedroom, right onto his bed. Thankfully, he'd gotten up to go pee and wasn't in his bedroom when the tree crashed. But a bad deal. But we're going to talk about how you can mitigate a lot of this. And though it looks terrible, and it is for the short term, it doesn't really slow down the value of this product. Oops, sorry, let's do it in a minute here. All right, so let's talk about the high returns. So a lot of people I think are probably more up to speed on a single family home. And the mobile home park that we're going to show you here on the right is an actual park that we bought in 2015 and that we're looking to refinance this year. Purchase price was just under $200,000. And let's compare that to a home, at least here in Pensacola, Florida, that would, be equivalency. So $200,000 home would get you a market rent here about $1,500, PITI around $1,200. Pay about 10% on your management. So you put $50 a month away for repairs, and you get cash flow, probably around $1,200 a year. You get a cash on cash around 3%. Your value the next year, even with a little appreciation, things are going up pretty well here, 212. It's a good deal, but you're not writing to home to mom because you're super rich, right? The mobile home park we bought for $200,000. Our market rent was $6,000 at the time. It's since moved up to closer to $7,000, and we're going to move out some mobile homes and move in some RVs, and I'll move about 10. Our PITI right now is about $1,300. Pay the same 10% for our management. Repairs a little bit more, but our cash flow consistently over the last few years has probably been averaging a cash on cash of 75 to 80+%. So, $27,000 down. I've made that over like twice, 3 times in the last 5 years. So that's why I like it, because I can make more money than a single family home. Let's talk about the initial price, right? And so there's a lot of opportunities with mobile home parks. First off, what is a park? Well, anybody that has 2 homes together considers a park, so be careful. But once you got a handful of homes together, you got something going there. The actual cost of a used mobile home is really zero to about $20,000. We have taken multiple free mobile homes that wholesalers or people that bought land just wanted to get rid of, and we were able to move them onto our property and then start renting them out. Now, typically there's going to be some kind of repairs, some updates you're going to have to do for that, but there's a lot of people that just don't want trailers on land that they have. So used mobile homes are always an opportunity. The other thing is, if you own a mobile home in a park in which you have to pay a lot rent and you choose to not live there anymore, what do you do with your mobile home? The likelihood is you don't have the funds to move it. And if you did have the funds to move it, where are you going to move it to? Mobile home parks have been dropping by, they think, something like 30% since 2000 because there's really no good data on it, right? So a new mobile home, right, you can spend as much as you want. Most of the mobile home industry in 2000, well before there was the crash in single family homes, happened earlier on with some financing back in 99, 2000. Supposedly they were making about 400,000 mobile homes back in the late 90s. And we're down to about 100,000 mobile homes now today. And if you look at a lot of those homes, a lot of those now are the double wides or the homes that would really be going on land. And so there's not a lot of these park model, single wide, kind of tried and true homes out there like there maybe would have been 15, 20 years ago. And then you still have some costs after you have this home. And you gotta move it. And so, maybe as low as $3,000, but I've seen up to $15,000 when it comes to putting all that stuff together, getting the setup, AC, everything else. The truth is that mobile homes aren't that mobile. And I think everybody in the industry knows that. You can sell a mobile home to a tenant. That tenant might leave, but the likelihood of them taking their home is pretty small. And if they do take their home with them, that's not that big of a deal, I'm finding out. Some other things, right, to just sell you on these price. Kind of industry standards that homes often cost about a third of what a traditional home would cost for the same size, but would typically rent for about 2/3 the cost of a similar home. And so just knowing that alone, there's a little bit of arbitrage against just buying, loads and loads of single family homes in the average market. And then the big one here for me and why I'm in commercial real estate is the price for the mobile home park is completely based on how much money they create, not how much the mobile home park next door is, right? So it's all about that NOI. Let me see if I got some other stuff here on that. Let me think about that one fast. Let's buy. And I don't know, knowledges on commercial real estate, but for a house, if you're going to have a house, its value is going to be based on what the other houses in the area are and the amenities it have, right? So we're going to call that a comp, a comparison. For home park, it's going to be based as commercial real estate. The commercial real estate, what you're really buying is cash flow. And so you're trying to figure out how much cash flow that thing can continuously, and then how much you're willing to pay for it. So if we were both looking at two different commercial real estate opportunities that made the same amount of money, the question would be, how much are we willing to pay for this? Well, if it's a Class A, brand new, really nice apartment, and it's making the same amount of money as a really beat up old mobile home park, you're usually going to find that people are going to pay a lot more money for the same cash flow based on the asset type and how nice it is, how pretty it is. And when they get that, I don't want that, that's embarrassing. That's typically when you can make money, or you can buy that cash flow for a lower amount or a higher cap rate. And there's a pretty simple math equation there, right, to get your value. And it's just NOI divided by cap rate equals your value. And if you have any questions on that, please reach out to me later. This is like my favorite topic. I get super jazzed about how you can make really small changes. Let me give you an example of that. So the first mobile home park that my partner and I actually put under contract, we did not buy. And it's a very interesting story, and it has a lot of twists and turns even to this day. But we put it under contract in 2014. We raised money for it as a syndication, did all the right things we were supposed to do, and then the guy died 2 days before closing. On that park, though, it was $800,000, and I think we were buying it at about a 9 to 10 cap on the actuals. But the thing that we knew on that property was that they were spending approximately $50,000 to $55,000 a year on water. The park owner was paying the water bill. And so we looked around and we noticed that a lot of the mobile home parks in Pensacola were charging the water back to their tenants, or were charging a higher fee than that park was. And so our plan was to have a company come in and install water meters, and then they would actually bill the tenants each month. The tenant would pay a little bit of fee to them for being able to do that, but they would completely handle all the billing, and we would be able to basically hand our water bill back to the tenants to be able to pay every month. By doing so, right, about $30,000 doing that, we would save $50,000. Well, since we bought this thing at a 10 cap, if you divide $50,000 by 10%, we just added $500,000 in value by installing water meters, right? And so just one smart little change right there had a huge opportunity to change value. And unfortunately, with the probate process, some other people found that out, and they snaked us and paid a couple more $100,000 to get that deal for us. The funny part is the guy who died, we're actually under contract to buy one of their other parks as of yesterday. So small world. All right, so let's talk about competition. I think the stereotype, and in fact, it still exists in my family now, when my parents are not always proud to discuss, what I do for a living. I get the stereotype of a slumlord. I don't think that's fair, but it still exists, right? A lot of people, I think, factor in pride of ownership when they buy something, right? And especially if you have a spouse who's not really into it, or you're doing real estate kind of as a vanity project, and you want to have great Instagram pictures. I can promise you the mobile home park that I just showed you the numbers on, that makes me about 75% cash on cash, is not something that you're going to get excited by. And so if you add pride of ownership into your investment decision, mobile home parks don't make sense. But if you don't care about being sexy, but care instead about cash flow, I think it's where you're at. I think the other missing set from mobile home parks is the type of people. I have never seen the show, but I hear probably a quote from Trailer Park Boys about once a week, right? And so everybody assumes the basic trailer park is this group of, country hicks who don't pay their rent, bunch of drunks, bunch of meth, right? I can't tell you how many times somebody asked me if I've like found meth houses. No, right? And so there's this misconception that the people that live in a mobile home park or live in a mobile home are somehow lesser or worse or tough to deal with. The truth is, I've owned apartments in urban areas, I would describe it, and I've owned mobile home parks in rural areas that have almost the exact same size and rent. And I can promise you, it is way harder to collect rent from that apartment tenant in the middle of town who thinks he's hood than it is for the good old country boy who's going to pay after a month. It's all stereotypes, but for the most part, our tenants out there are choosing to live in a mobile home because of affordability, number one, but probably number two is they have a little bit of space. And so the fact that they have their own four walls and a little bit of green space out front is something that they choose at their price point to be able to rent or buy for why they live there. And then industry, quite honestly, right time has been very much mom and pop. And so a lot of rundown mobile home parks have been a huge opportunity for the last 3 or 4 years as people have started to buy those from the original owners or operators for the last few years and then start turning them around, cleaning them up, and making things not embarrassing when you drive in, right? Little things like a new road. If the road blows out, go build a new road. Put up a sign that you can read. And then investors, I think, still would prefer to make a high return or think they can make a high return because they can find something else, right? So how do I describe this, I guess, in the easiest terms would be that a lot of people find shiny objects and they one-off deal and they think, okay, that's what I'm going to do because this one guy I know made a ton of money doing whatever, right? And so they're like, I don't want to do that. There's other things I can do. But as many people say they don't want to do it, that's good for me, right? And then the last one I would say is that I don't want to blow smoke up anybody's butt because competition's greatly increased. In the last few years, when we were buying from mom and pops, the brokers selling mobile home parks even 3 or 4 years ago, sophisticated, changed. And that's typically with the value from the homes, which is not typically something you'd want to do. And so you're seeing the price per pad kind of being a more of a term used, similar to the apartment industry, where as competition has increased, the pricing has moved away from the pure valuation of the NOI, and it's now moved to a price per pad or just see if they can find a bigger schmuck. So be careful, right? Not every deal is actually a deal, but a lot of deals are out there. All right, so we talked a little bit about the demand for the type of people. There is great sources of data on the mobile home park industry. It's very fragmented. There's only a few really large owners, and most of those really large owners, the Sam Zells of the world, are in nicest parks in South and Central Florida. That's typically not what I'm talking about. When I'm looking for mobile home parks, I'm looking for that real C-class workforce housing family-sized park. But we think it's somewhere around 17.7 or about 5.6 of Americans live in mobile home parks, and that it's the largest unsubsidized affordable housing, which I think is cool. The thing I'll tell you too is that as these parks have continued to be kind of pushed out of town, in fact, I would guess that most people live in a town where it is hard or nearly impossible to build a new mobile home park inside of city limits because zoning has made it very difficult or has pushed out mobile homes. So because of that, we've seen a contraction of the number, and the need for it has only grown, right? And so I think the demand continues to increase. And one of the things that I don't talk about specifically in this presentation is that I think a lot of the people that would have lived in a mobile home 15 or 20 years ago are moving to RVs. And so they're buying RVs, a trailer or a Class A, typically not in great shape, a little bit older, but it's cheap, right? And they're just hoping they can go park that somewhere and call that home. I think that's sad, but I think that's just part of those shifts in employment that we see. And there is a huge need for basically just a place for people to call home. And even if it's $400, $500, $600, $700, $800 a month for them to park their trailer, that's still better than what they can do in an apartment, right? Which probably isn't a great apartment, and they have to share walls, and they don't have any space around them, and they're in a part of town they may not want to be in, right? And so the demand just continues to explode. I mean, we have a park down here, RV park that we closed on in February, and 36 spaces. And I think our wait list at this point is 10 or 12 on any given day for just wanting to move in. We see down here too in the South, a lot of retirees. So, moving away from the snow coming down here, typically on a fixed income. And so they're bringing a trailer down, and they're going to basically live either in a trailer or look for a mobile home kind of as a place to retire. And then, of course, I think we all know from real estate, the United States just hasn't built enough houses really since 2008. And so there's just a massive demand for places for people to live. And so that lack of housing stock continues even in the lower demographic. And then finally, recession resistant, right? And I'm not going to claim that mobile home parks won't have any effect if the economy totally drops off. I found this out, unfortunately, the hard way myself. Bought a mobile home park in Baldwin County, Alabama. So kind of the ritzy east of Mobile County. It was the one that was really hard hit last week with the hurricane, Orange Beach, Gulf Shores. So we're kind of in the middle of the county. We bought it, of course, weeks before COVID hit. And most of my tenants had service type jobs, right? And so a lot of them were out of work for quite a bit of time. A lot of them are going to be out of work now going forward. But here's the kicker, right? If they can't afford it, it's an RV. So they can just get up and go somewhere else. And I have a spot. And I guarantee I have somebody else that's ready to move right in. And so it's not perfect. And if it's poorly managed or you don't have a strategy, you're not thinking ahead for when these problems happen, you can and will struggle. But the demand for the lowest cost housing available is going to continue to rise. And so we still had our best months in all of our parks, May, June, and July at the height of COVID, when lots of businesses were still struggling. All of our tenants knew that they had to pay, because if they didn't pay, there was no place else to go, right? And I think a lot of times it's a pretty sobering fact when somebody gets mad at you and they're like, well, I'm gonna go find some place to live. And if your response is, that's fine, tell me where you're going, right? And then they could do some research and they realize there's no place else for me to go, right? There's no openings, or I can't afford them, or there's nothing that's gonna work. And they beat to a different drummer. And it happens, they still leave, and that's fine. But again, we typically, without much marketing or just Facebook marketing, we keep them flowing in. And then the cash flow, right? So I'm not buying for appreciation. If my mobile homes increase in value, that's awesome. But I completely are buying these based on the cash that I can put in my pocket or my investor's pocket. So when the recession hits, as the recession hits, if the recession hits, right, I think of it a workforce housing, low income housing, unsubsidized housing, however you want to call it, continues to have a winning business model as we go. All right, Creative Solutions. We talked a little bit about the water here earlier. A lot of times these parks come with other things that may or may not be used by the previous seller, but could definitely add you value, right? So the 60-unit park that we're under contract on with right now has two things that are pretty interesting. One, it has a single-family home that's just being rented out, right? And I thought this dumpy little home, it'd be rented for nothing. No, they're still getting $850 for it, and it's only a 2-bedroom, 1 bath, and not a great part of Pensacola. But there's once again just a demand for it. That same property also has a back 3 or 4 acres that they're using not well, but they have a few things that are using it as kind of a self-storage. So another just kind of ancillary way to make a little bit of money. And then they're also having a laundry room, some vending machines, just a few things like that that just allow for some extra money. And yeah, $250 a month in laundry fee isn't going to make it rich, but I'll tell you, every little bit counts. And when you start adding an extra $1,000+ a month from stuff that's not directly related to just renting out the trailers, that's pretty good. Historically and currently, these are still much harder to finance. People always ask me, how do you finance your mobile homes? And it's a secret, right? I don't want to tell anybody. And a secret looks something like this. I go and I find on Google every commercial or local bank in the area in which I'm looking to buy the home or the park at. And I go and I call all of them and I write it down on a spreadsheet, who a commercial lender is and the phone number. right? And I finally get that guy on the phone because they never freaking call you back the first time. And I go down the entire list of all something 30, I think there's like 36 that I've done here in Pensacola. And I asked the guy, hey, I'm interested in buying a mobile home park. Would you be interested in financing it if it met your criteria? And you find out very quickly that most people are not interested in financing mobile homes. But you don't need 30 people to say yes, you need one. And so I've had a lot of success really down here, really just using 2 banks here in the Pensacola area and a few more in some of the other markets to be able to actually purchase these. And so because of that, because everybody kind of recognizes that that financing is difficult, you typically have sellers who are offering pretty quickly on or pretty receptive to the idea of seller financing. 2 parks we have under contract right now, the 60 unit, we're getting, I think, $700,000 back on a seller's second. So it should mean that we have almost no money out of pocket to close that deal, $3 million deal. And then we're buying a 47 unit, next week we'll close. And again, the seller's providing the entirety of the second needed to close the deal the bank won't cover. And so partner and I, right, with almost no money, are going to be able to, purchase over 100 units here in Pensacola, run these parks significantly better than being ran now, probably add 20 to 30% in cash flow just because we have a professional property management company and a business plan, and we're willing to do just a little bit, right? And then by doing that, right, because of the NOI now increasing, we'll also increase the value of it. It's like a win-win-win. The other thing is for anybody out there that's got super greeny, right? You see that second to last one there, you can charge for utilities. I don't know if anybody's ever considered this, right? But if you don't have to pay for your electrical, or you don't have to pay your electric bill, or you don't have to pay for your water bill, what do you think about that water bill or that electric bill? You don't, right? And so they just spend. They're running the air conditioner at 65 with the door open, right? So a lot of times our plan is to come in and take over these parks. All we're going to do is we're going to just move the utility costs from the park back to the tenant. And typically that could be a savings, per unit of somewhere in that $70 to $150 range. And I'll tell you, it's not actually going to cost the tenant $70 to $150 because the second that they have to become responsible for their own water and their own electrical, what are they going to do? You're going to shut the damn door and turn off the AC, right? And so I feel like I'm saving the world and saving money at the same time by just making it a little bit more fair for everybody to be responsible for what they actually use. The other option that we've done for a couple parks now is we've begun to sell some of the park-owned homes. You have the highest, most desirable park would be one in which all the tenants own their own homes. You never have to go into any of the homes because you don't own them. There's no maintenance for you to do. And all you're doing is collecting your lot rent, right? You're just basically making money off the dirt. The truth is most of these parks that you're going to find are going to have some, if not many, park-owned homes. Now, depending on how you finance the park and your ability to release those liens or release those titles to somebody else, you can sell some of these park-owned homes. So we've been able to actually sell quite a few of our park-owned homes. And just kind of like you would do it maybe on a rent-to-own or a lease option something, you take a pretty big upfront down payment to make sure they're serious. A lot of times that'll basically cover the cost or most of the cost of that home already. And then you put it on some kind of payment plan. And if they don't or choose not to go through with paying off that home, you continue to get the home back and you can sell it again, right? And that happens. And it happens with nice homes. We sold 2.5 years ago, we sold an 80-foot, super nice 3-bedroom. We put quite a bit of work into it, home to a couple. And earlier this year, they decided that they wanted to go buy a home in a neighborhood. It saved up their money. And we said, what are you going to do to the house? And they said, I don't know. And they literally just handed it back to us. They didn't want to deal with it. We came to find out they didn't want to deal with it because they had a roof leak. We had to fix the roof, but fix the roof. Now we sell the house back again. We basically have an asset that we can continue to make money off of with nothing into it, right? It's that infinite loop that becomes pretty good. And then the other one that I think is the most important thing here, and if you get nothing out of here, this is how you make all your money. It was worth your time. Vacant lots in mobile home parks right now are super hot to be able to put in just RVs. Now, I don't know where you live, what the legalities of that are, but here in Escambia County, we can put 2 RVs on any single mobile home lot. So specifically if it has the septic, We have to do that. Now, to do that, we have to bring in an electrician and get new power poles, get the 30, 50 amp service. But if there's the physical space, we can take two mobile home spot, one mobile home spot into 2 RV spots. Why is that good for us? Well, that RV spot is going to typically rent for the same or more, right, as the mobile home lot rent. And so that mobile home park that we bought back in 2015, we're currently under the process of moving, I think, 5 or 6 of our mobile home lots to RV spots. And we're going to go from about a 65 to 70, or it's about $7,000 rent roll. Our rent roll should go over $10,000 here in the next few weeks as our electrician finally turns on all of those power poles. And we already have a 5 to 10 person waiting list that's revolving because it's taking so long due to the hurricane, of people ready to move in and take those things right away. And so is it going to be a really pretty place with a whole bunch of dumpy trailers? No. But is it a service that those people need? Yes. And do I care? Not really. Like, we're going to continue to have the rules and make people follow them, but at the end of the day, they need a place to live, and we're going to be able to provide that clean, safe, and functional spot that they need of. And the last thing, there's probably things I haven't even considered, right? We talked about the vending machines, the laundry. We have sometimes been able to charge people to park like trailers, even some of the tenants sometimes, right? Can park trailers. The one that most recently became very interesting to me, and one I want to talk about, we saw the picture earlier of the mobile home that had been destroyed by the tree. Not ideal. However, the day after the hurricane, or 2 days after, we got a phone call from the mobile home supplier, store supplier in town, asking if he could buy all of the mobile homes that had been damaged in the hurricane. I did not understand why, but we called him back, and he is in desperate need of parts. And so basically what he'll do is he'll come in and take the trailer out, drag it back to his shop, take out all of the usable parts and resell them. And he'll make a profit because he can't find a lot of these parts new anymore, or not at least economically new. So we're potentially going to get all of these old RVs, all these old mobile homes moved out of the park after the hurricane. We now have space to put in RVs that actually we can charge a higher lot rent for. And for a park that right now has a gross rent of about $23,000, that likely will move up into the $30,000 to $35,000 range after the hurricane when we clean out these trailers. And so short term, it sucks, right? But the long term, the financials of it will actually continue to improve. Not only that, because there's not much affordable housing, we've already had FEMA in our park twice, and they've already started considering their opportunities to maybe bring in trailers for us, or other ways to be able to help clean out all of the trees and the problems, because they know that they can immediately get people places to live that otherwise have no place to go right now. So a bad deal. No, I did not like running a chainsaw for 3 days, cleaning out all these trees. And I don't think you actually have to do that. That's just because I live here and I felt bad about it. But financially, man, pretty awesome. All right, so let's talk a few down and dirties of, you want to buy a mobile home park, what kind of questions should you ask so you don't look dumb? And how can you start thinking about the process of underwriting? So the questions I think these are not all in any way, shape, or form, the big ones here. So what's the type of park, right? So parks are kind of treated on a star system. 1-star parks being the worst, 5-star being basically nicer than anything I live in right now. The 4- and 5-star parks are pretty rare that you're going to see those kind of, anywhere outside of kind of the resort areas or Southern Florida. And most of those parks have been bought up by some big consortiums and big New York City kind of money, the Sam Zells of the world. I really like the 2- and 3-star parks, right? And how you decide what a 1, 2, or 3-star park is a little bit debatable, but basically it comes down to the amenities, the type of roads, and the age of the units. But the 2, 3-star parks, right, where you got families living in them, there's some stuff that you can fix. There's some opportunities for you to add value. That's kind of the parks that I personally really look for as I'm going. The next question you want to ask is the utilities. Where does the poop go, right? Who owns it? Who maintains it? Where does it go? There's multiple types. The best thing that I'm always looking for, if I can get it, is I want city water and sewer. City water and sewer means once it hits the street, right? It's not my problem anymore. The city's going to deal with it. By far the best. The next would be, for me, it's typically a septic system. Septic's a relatively well-known problem out here, right? So you're going to have to do work on it. You're going to have to keep it up to date, but it's relatively easy to maintain. And if you lose a septic tank, you can replace it for tens of thousands of dollars, and it can be done, right? Leach fields, whatever. You can understand that problem. The third one that I would consider, but it'd have to be a pretty great deal, would be a packaging plant. So a lot of these larger mobile home parks have what they call a packaging plant, which is a large machine that is basically a private utility that is its own basically wastewater reclamation. And so these things are kind of a big, if you see them, they're like big cement rectangles, more or less, have a whole bunch of power going to them that do the job, right? And so you become basically your own little utility. The downside of those, they do the job fine, is if something breaks, it's very, very expensive to fix those. And so they become less and less desirable. I've looked at many parks now that have had packaging plants, and owners have gone ahead and moved to city water and sewer, which typically is pretty expensive because you have to get all the lines run, or have just moved to septic if they had the space to do so. The last, and the one I would tell you to be very careful about, is a lagoon, right? So I've still seen parks in the last few years that have lagoons. A lagoon is what it sounds like. It's a poop lake. And so, just a second here, let's put in. For lagoon, right, the wastewater would just go to a lagoon, to a big lake, kind of berms all the way around it. They typically have an aerator in the middle, so you get a little fountain in the middle of your lagoon. And if anything would ever happen to that lagoon, you almost have to get into a scuba gear to go in and fix that little aerated pump, or if it would expand or get out of there, right, you now have a environmental problem. So I would say be very careful in general with lagoons to make sure
awesome.
Make sure you get a full rundown of your environmental impact there as you go. The next one would be roads. What kind of roads do they have? Are they paved? Are they dirt? Are they crushed rubble? And then, does the financing require certain kind of roads? I've talked to many a bank where they will only finance if it is an asphalt or an actually kept road. They won't do dirt roads. We talked about the park-owned versus tenant-owned homes. How many of each? How much are the tenant-owned homes making from the lot rent versus the actual home itself? And can you sell them, right? Those are things I'm asking. The size and the age of the park is also important to you, right? If you're doing a lot of work and you've only got 3 units, it may not be worth the effort sometimes. But the other things you're looking for is the actual size and age of the homes. So of course you're going to get probably a lot more rent out of a double wide, but you're also going to have potentially more expenses for maintenance. I don't know anything about snow loads on roofs, but I know in the north, if you don't think about the snow loads on your roof, you have a huge problem in the wintertime. Down south here in Pensacola, we have to be very careful about the wind ratings and making sure that it has the correct plaque so that it can be insured and is legal to basically be inhabited in the county. And then the size, right? So you're talking about both length, number of bedrooms, and width. And there's different types there as you go. The next one here is location. So you have to be very careful, and you have to be very careful about your location because some locations do not allow mobile home parks, even though a mobile home park exists. And we found this out with a buddy of mine here in town. A partner I've gotten a couple other deals, bought a mobile home park in Baldwin County, which is the county next door to this, where I have my RV park. And it is not zoned for mobile home park. It is not allowed to be zoned for mobile park. So he bought a mobile home park and then immediately was told by the county, yeah, this can't operate. And so he's got the bills to pay. He's got tenants living there and he's being told he's got to shut down, right? They shut him down, kicked everybody out. And now he has a piece of property he can't do anything with. He has to go back and sue the broker for listing something that wasn't even legal to be listed as a mobile home park. Huge problem. Governments hate mobile home parks a lot of times, right? It's just not something they want to deal with. And so a lot of times they will change the zoning after it already exists, which means you can typically continue operating it as is, but depending on where you're at, if you take homes out, you may not be able to bring homes back in. And if you think you could expand it because there's space to do so, that may also not be legal. And so making sure you get a call to your local government to understand the legalities is important. And then the other one I would really like to understand is this a rural tenant or is this an urban tenant? And so here in Pensacola, a little bit outside out of town, I love it. These tenants typically pay. There's huge demand. When we get to inside the city, people that are willing to live in a mobile home or that don't qualify maybe for a apartment in that area sometimes can be much harder people to deal with. We have lots of wonderful stories of that. It's not undoable, but you just want to know where it's at. And then we talked about RVs, right, and mobile homes. And, mobile home is also a term you have to be very careful with, because mobile homes are really anything that was built before 1976. Anything after 1976 is considered a manufactured house, officially. So if you get into the industry, don't sound like an idiot saying the wrong thing to people who care. But the question is always, how easy is it for that tenant to leave? Now, I've told you over and over again, I don't think the tenant's really leaving anyways. If you allow them to have a long-term lease with an RV, typically they're going to be there for a long time. But because that house does have a motor and they can just drive it away, it's something you have to consider. And typically it's going to be a bigger problem for the financing institution to get over than it necessarily will be for you as the owner. And then how do you charge for those, right? For an RV, they often are looking for basically an all-inclusive price. They want the water, they want the electrical, and they want a Wi-Fi connection for their price. So you can charge them hundreds of dollars more than the same mobile home spot, but you also have to provide services. So you want to make sure that you're covering your costs there for the effort. And that is the majority of what I have. I think I'm at 8:47, and I could literally go on all these topics for hours and hours and hours, but for the interest of time, I'm not going to. Let me see if I can expand you guys out, see who's all here. Stu, can we take some questions?
Yeah, man, let's do it. How about we just use the chat box here?
Oh, yeah,
so if anybody has some questions, throw it in the chat. I'll try to monitor.
I can monitor the same thing here.
There you go.
Let's see.
Don't all jump in at once. I got. So what are some, Jeremy? What are some downsides or things to like watch out for besides what you've talked about already? For me, one of the big lessons learned when I bought my RV park in Texas was just the utilities, and mine was on a septic. I didn't really plan for how often I have to pump it and how expensive it was to pump it, and then leaks I incurred along the way, which increased the water bill significantly on months on end. So that was something that I learned.
I think you're bringing
couches or nothing. I mean, we have plenty, so it's just the romaine letter.
The thing that you would like, right? That I would like would be to own a mobile home park and really have only two responsibilities: the roads and the utilities. And so, though that'd be great right off to get more stuff with that, but those utilities are super important. We've spent a lot of money on septic systems for our parks. I don't know how necessarily everybody's into the details of how septic systems work, but you typically are going to need some kind of leach field, and you're going to have some runs right at some point. Well, people in these parks often don't necessarily always keep inside of the boundary lines of where they're supposed to park, and so a lot of times those get ran over, especially with RVs or something. They can break some of those lines, causing even backups in the septic. And so I always want to make sure that we're always doing some kind of inspection on those before we buy the park, and knowing what the timeline is we'll need for pumping, and then just always making sure that I put pumping septics at least once a quarter, once a year for one of the many in the park, kind of on a rotating basis. And then water, right? If you get water breaks, you're talking about huge loss on water bills, and especially if they're little breaks and they all just kind of build up. And so pressure testing that stuff, and then always being on the lookout for wet areas that are not supposed to be wet, and immediately getting somebody down there to dig those out. Super important. I got some questions here on eviction law changes. Yeah, so we've had the same problem as everybody else. The governor prevented evictions based on inability to pay rent. So it was pretty narrow initially when it was just DeSantis. So if they did other things, it was pretty easy to get them out. The CDC, of course, and the president said all evictions are basically a moratorium until the end of the year. We have a few people that we'd like to get out that we can't. But that does not mean that you can't move somebody out if their lease runs out. So if your lease runs out, you got to go, right? There's no ability to stay. So a lot of ours are month to month, or the leases already ran out. And so we've not chose to renew. So if we need to move somebody out, we've been able to do that. What determines the amount of owner versus personal owned trailers? Honestly, it's just whoever had the park before you on how they filled out the park. People used to actually buy trailers and move them into parks. That was a thing like, 30, 40 years ago. I don't think people do that very often anymore. And so now typically it would be people had probably owned those trailers at some point, and then as they've left, the owner typically bought them back, or maybe the owner built the park and put all the things in there as you go. I personally don't have a problem with park-owned trailers. It adds some complications to maintenance, but you also can make a decent amount of money on it too. So it's just going to be depending on what they are. Section 8, yeah, you need Section 8. The other one is there's some VA VASH. It's kind of like a Section 8 program for VA. And so we've been looking at a park in here in Pensacola that has almost entirety of the residents are VASH. So all being paid by the VA. And so same stuff applies there. You still have to do the annual Section 8 HUD inspection. And so if your trailers are not in pretty decent shape, it becomes very difficult to pass those. I don't know what y'all's areas VA or HUD inspectors are like, but here in Pensacola, you never pass the inspection on the first shot. You always got to find something that's wrong. So it can be a problem if you don't have newer trailers, because they're just going to find stuff that even I wouldn't fix in my own house. I do have property managers that live on site, but I don't think it's required. She happens to live on site because we found her after she lived there. Most of my properties that have always been managed by a third-party manager that's not on site, and we are actually opening our own property management company. The other downside, I guess, that Stu is asking is it's hard to find people that want to manage these as a professional job. And so you kind of have to be willing to look at all the different ways to do that. And so maybe that's, you have a greeter and you do all the financial stuff yourself. Maybe you do a manager, but they have a limited responsibility, or you can actually move to the full responsibility. But I would always recommend apartments or mobile home parks to find a property management company before you get into due diligence. Because if you don't have somebody who can help you determine kind of the rents and the way forward, and they can do the work to do it, what are you really buying as you go? Yeah, so I've syndicated now six deals, 7 deals, something like that. You can syndicate a mobile home park, right? Same thing applies. You just got to be able to sell it. I know, looks like Stu and Dave did that recently there in Colorado. I'm invested in a couple actually passively too. One of my 401k IRA, and one from just in cash. Both of those are doing pretty well. Yeah, raise money, make sure you do it legally. You got to spend some money to make sure you get the correct representation from an SEC and a PPM and all the other trash, but it's very doable. Just hire people who know what they're doing. Contractors that specialize in mobile home parks, I think, are generally a ripoff. They exist, but most of the time you're going to find success with finding lower end labor to kind of be able to make those fixes as necessary. For homes that aren't in great shape but are livable, and there's a difference, right? If it's unlivable completely, don't put a tenant in there. That's asking for liability that you don't need to do, and it's not fair to the tenant to live in something that's not habitable. But for RVs that are mobile homes that are just in tough shape, we'll often sometimes trade the first month's rent or first 2 months rent for some repairs. You need to be very careful when you do that to ensure that you are able to get a specific requirements of what's needed, either for them to move in or that has to be completed for that rent to be forgiven. But yeah, we've done that too quite a bit. And a lot of times people willing to move into these are looking for a handyman specialty. Hey, if I turn this place around, can I save them? And my answer is, if they can do the work, sure, but everything has to be written down. Never use any USDA or FHA loan. These are going to be commercial deals, so it's not really going to apply on the, well, at least I think of that. There's probably a specialized case, but I've always just used local bank loans. I have started talking more and more to the specialty mobile home park lenders, but most of those don't really want to talk to you until you have about $1 million loan balance, and they want paved roads, and they want a certain number percentage to be tenant owned. They don't like park owned homes, a lot of those guys. What's a good return for an LP in a mobile home park or RV deal? I think that's tough. And there's a difference between year 1 and year 5. I'm not interested really in an RV or a mobile home park deal if I can't see probably a 10% return myself. And that would be kind of year 1 and hopefully with some upside in the back years. But I'll be honest, there's such cap rate compression. Everybody's kind of rushing into real estate over the last few years. I would not have been interested in a deal in 2015 unless it was probably a 12 to 15% return on investment. And I pretty much now don't sell an apartment deal that doesn't start at an 8% cash on cash. It's just the nature of everybody wanting to buy it. There's too many things in there. And then the differences between a mobile home park and an RV for a lease. I'm not a lawyer. I don't play one on TV, and I only live in Florida, so I don't know everybody else's rules. But in Florida, we have some pretty great RV rules that more or less, if they don't pay the rent, I can just turn off the electricity. I can make them move, right? Cannot do that with a mobile home. So if you have a lease here in Florida, greater than 7 months, you don't have to pay the hotel bed and sales tax. If it's less than that, you do have to pay the hotel bed and sales tax, which adds some complication. You can work apparently to get those waived, but there is a difference, but it's not dramatic, and that's why I have a property management company. The low supply part question. Yeah, so they haven't built, right? So it's kind of like cars, right? If they haven't built your hundreds and hundreds of cars, 20 years from now, you're looking for parts. There's just not many left. So there's not a ton of mobile home supply houses. I think there's 2 here in the Pensacola area. And so they're always looking for parts and pieces. Mobile homes have unique systems a lot of times. You know, the windows the walls are thin. The appliances are different. Typically they're smaller, right? And they're weird sizes. And so a lot of times it's always tough to find some of those parts and pieces. And if you can sell off a mobile home that has some of those or take parts from one for the other, that's always helpful. Last one here. Do tax benefits that you receive? Yeah, absolutely. So depreciation is real. You can't depreciate land. And so if you're buying a mobile home park, you have to depreciate actual property. But since these mobile homes are titled as vehicles, you should be able to depreciate those based on your accountant's view of the laws like a vehicle. So pretty quickly, you're not looking at 27 and a half years, you're looking at like 5. So you can get a huge depreciation hit. Now remember, if you do this as a syndication or you buy a bunch of people and then you sell it in 4 or 5 years, you're going to have depreciation recapture. So depreciation is great, but it's not free. So be careful, all these cost seg guys trying to sell you something that's not really going to affect you. And the other thing with depreciation is you can only offset it against other like income. And so if you're not a professional real estate investor as dictated by the IRS, then you can't write it off on your active income. And so I keep talking to guys like almost once a week where they're telling me all about cost seg, how it's going to change my life. And I'm like, yeah, but I worked with the Navy, and so I legally can't consider myself a private or a full-time real estate investor, even though 4 times more income is made in real estate than it is in my Ford Navy job. But because of that, from a timeline perspective, I'm not a professional real estate investor, and all the passive offsets don't apply. And so I love depreciation, but I don't think it's always well described to the average investor. So, yeah. Stu, I feel like I talked for an hour.
Drop the mic. Boom. See you later.
Yeah.
Dude, that's awesome, man. Yeah, we're right at an hour. Does anybody else have any burning desired questions that just need to be asked?
Yeah, you can use your spouse. My spouse is too lazy. She has 3 kids. Sorry.
No, she's not too lazy. She's just too busy with kids.
Yeah, we'll go with
that. Man, we had a good crowd tonight. I appreciate everyone coming. This is recorded, so I will send this out in case you missed something. Gonna want to go back and review it. Jeremy obviously is continuing to buy mobile homes, mobile home parks, RV parks, apartment complexes. So if you are interested in talking to him more, please hit him up. And then Goody and I are also interested in buying more with our friendly partners down there, D. Reezy, Byron, Katie. And we're looking at more deals in Colorado as well. So
Hey, can I get one last little offer in there? Is
Yeah.
if you're so interested, right? I've created a not a terribly long PDF on buying mobile home parks, kind of some of the information I talked about tonight and some other stuff. If you are interested in receiving that, send me an email at Jeremy at Climb Capital. Let me put that in the notes. You can just copy and paste it. Be glad to send that to you. Glad to have a continued conversation after this. You'll probably get emails from me once in a while if you send it in. I'm going to trade you a free PDF for your email, but I won't blast you every week, just probably every quarter. So if you're interested, send that out. And if you just want to sit down a time to talk more, I shortly will have my website up and running to start scheduling those out kind of on a weekly basis as it works.
Cool. All right, Jeremy, thank you, buddy. I really appreciate it. I'm going to hit the stop on the recording here, and you guys have an amazing evening. East Coasters, thanks for staying up so late. And